Good morning, everyone. Hi, it's Nabil from IG, Premium Client Manager. Very good Tuesday morning to you guys. A lot of exciting things happening in the market right now. Yep, just a quick disclaimer. So basically, IG provides an execution-only service. Information in this presentation is intended for general circulation, does not take into account specific investment objectives, financial situation, or particular needs of any particular person, and IG accepts no responsibility for any use that may be made of this information and the consequence for it. Okay, so moving along. Now I'll try to cover what Ryan normally do, which is the calendar for the week and what to expect or what has happened. But one big news that we all can't ignore, which happened last Friday, I'm going to just touch a bit on that first, which is what? The Bank of Japan, isn't it? So what they basically did was that they boost their bond purchases to 80 trillion a year. And basically that's a 30 trillion yen increase in the pace of long-term government bonds. So essentially what they're doing is just additional quantitative easing to spur the economy. Okay, besides that, their public pension fund, all right, they also revamp it to focus more on stock investments rather than bonds. Okay, so all this create a lot of movement in the market, especially for the yen pairs. I mean, the reason why BOJ is doing what they're doing is simply because they want to revive the Japanese economy. Inflation target is still not on course. All right, basically they are targeting 2% growth, but right now it's still below that. All right, still way below that, which is why they are doing further quantitative easing to boost the Japan economy. And what he has done into the market is basically, if you look at dollar yen, it has shot up about 400 pips from where we were on Friday. All right, very similar to where we were on the 2013, end of 2013, when they did the first round of quantitative easing. Yeah, so I will go through a bit more when we get to the charts later. Okay, but basically for this week, so today what we have a bit of Australian news coming out this morning. Nothing too significant. I think a lot of movement for the Aussie dollar is caused by China as well as what the US is doing. So USD is still very, very strong at the moment. Just have a quick look at there's a US trade balance coming up tonight. On Wednesday, nothing too significant, but just take note, you have New Zealand employment coming out at 5:45 a.m. New Zealand right now is in quite a bad situation. I think the Reserve Bank of New Zealand decided to pause any interest rate hikes, so Kiwi took quite a tumble last week. You got some UK and EU sales and service PMI coming out, US job data and all inventory, so nothing too significant on Wednesday. But Thursday is where fireworks might come to the market again. First thing is the afternoon. All right, you got the Bank of England rate statement as well as the ECB rate statement. Now, the EU is quite in a tricky position right now, simply because the economies and what it's trying to do. Of course, there are a few German numbers that came out last week. They were quite disappointing, especially the inflation. Okay, now Germany is always seen as the savior or the only country in EU that is doing well or supporting the EU. But right now, there are concerns within the German economy as well. I think the only positive light last week was the unemployment from Germany came up better than expected, and some of the bank stress tests didn't break. Was quite well received by the market. But overall, core CPI, which is the core inflation for the EU, is still low. Okay, with 0.4%, and the core CPI was 0.7%. So all this will beg the question of whether the ECB is willing to, expand its balance sheet, whether they are deciding to pump more liquidity into the market. I mean, they have all kinds of, bond purchase. They got the LTROs, they got the ABS, all kinds of funny names and acronyms to it. But basically, the whole essence of it is just quantitative easing. Okay, so right now the main lending rate for the ECB is about 0.05%. Deposit rate is minus 0.2%, meaning that essentially you got to pay money to the banks if you leave your money with the banks. Quite hilarious, isn't it? So tomorrow, basically there are no changes to the expected rates But I mean, we'll see. We'll see what will happen on Thursday. Okay, so be very mindful of what's going to happen on Thursday. That's 8:45 p.m. and 9:30 p.m. Normally, the market moves when Draghi starts talking about 9:30 p.m. Okay, and Friday. Okay, Friday you need to look out at the RBA policy statement at 8:30 a.m. No major changes from RBA expected again in terms of their direction. Basically, now they're just playing a bit of a wait and see game, and taking a cue from China and domestic economy. All right, but from recent moves of the Aussie dollar, China seems to be quite a big catalyst. So just pay attention to any China news. So US, yes, NFP, non-farm payrolls, first Friday of every month. Quite interesting for this time around. I think a lot of the market participants are just focusing a lot on what's happening in the Japan side, and the NFP. I mean, for first time in a long time, NFP is not really in the limelight. But basically, for the non-farm payrolls, I think it has been slowly improving for the past few results, which is why you see the Fed talking about potential rate hikes in 2015, and it ties in nicely with the QE3 ending this month as well. So the U.S. economy overall is doing relatively well, or I would say improving. And basically they are forecasting. I think last time it came out much better than expected, right? 5.9% unemployment rate as compared to 6.1% forecasted. So overall, if the NFP comes out again better than expected or in line with expectations, most probably you see the USD continue its strength. Yep. So right now the whole theme of the day is strength from the USD side. And on Saturday over the weekend, there's a China trade balance. Just be mindful of that as well, because that will affect Aussie dollar mostly. Okay. So just to do a quick summary, right? Let me move on to my charts. Yeah. Now, just to do a quick summary of what's happening in the market at the moment and why the currency pairs are acting how they are is simply because of this. Okay. Okay, you got the Japan side. Okay, and basically they are dovish. All right, interest rates are low and they are doing all form of quantitative easing. Okay, now the interesting time this round is that when BOJ announced further QE, there's additional news which says that their pension fund is going to ramp up its investments on stocks, and that actually caused the stock market, or I'll say a lot of major indices, to rally as well. If you look at S&P, if you look at the Nikkei, if you look at the all the major stock indices to rally as well, because there'll be a lot of liquidity coming, fueling the rally for the indices. Okay, so Japan itself is basically dovish on interest rates and doing all sorts of QE. The EU side, same thing, dovish, QE. Okay, and UK, some form still quite dovish on interest rates and also a bit of QE, but basically they're a bit more, I'll say they're a bit more neutral. All right, the economy is not as bad as EU or Japan. Now, if you take these three major economies and you compare what the US is doing on the Fed, okay, basically they are talking about interest rate hikes, okay, in 2015, and basically their QE has ended this month. So if you notice the difference, or how divergent the direction of the different central banks or different economies taking, it's not surprising that the USD is bullish, right? So just take note, because if you're trading in the market, especially as a trader, or especially if you're a currency trader or you trade the indices, a lot of movements by the currency is caused by yields expectation, what the central banks are doing, where the interest rate levels are. So basically, the whole gist of the recent movement is basically what I just highlighted. There's a big divergence in what the U.S. economy is doing as well as compared to the other economies, which is why the Fed is taking the totally different direction from the ECB, from the BOJ, from the BOE. And that's why you can see a big rally in the USD. Okay. Later I'll talk about gold and silver as well. Basically, gold, which used to be an inflation hedge, is losing its appeal simply because there's not much inflation in the world. All right, US, yes, is recovering. It's still in recovering stage. It's not fully recovered, but the other economies, like I mentioned, still suffering. Okay, that's why you see a lot of the precious metals dropping. All right, so with that, let me just take this. So I just look at this summary. I hope you understand why the USD is doing what it's doing. Okay, based on fundamental factors. All right, so it's good to have that kind of fundamental outlook or fundamental mindset at the back of your head, so that when you plan your trades on the charts, you know roughly what you're looking for. Okay. So moving along now, just a quick note that if you want to keep abreast of all the news that's happening on your platform over here, oops, sorry, just take this away. Okay, on your IG platform, what you can do is go to research and click on economic calendar. Okay, once you go to this page, all the different news releases will be out for the week. Yeah, you can go by day, you can go by week or month on the top here. And what you can do is if you go to under the alert section here, if you click on this little gear icon, you can actually send an alert to yourself whenever a news is being released, whether at the exact time, 5 minutes, 15 minutes, or 60 minutes before. Okay, all this can be sent to your email or your SMS. So very, very useful stuff, especially you want to be kept abreast of what's happening with all these news coming out. Alright, so this is just one feature that you can use on your IG platform. Okay, let's move on to my favorite part of the webinar, which is charts. Okay, so let's see, where should we start? Let's start with indices again. Okay, let's start with the S&P. Yeah, so now looking at the S&P weekly chart, okay, I mean, to be honest, the S&P, the DAX, the FTSE, a lot of these indices are in quite, I mean, I find it quite tricky, especially last week in terms of the movement. It caught a lot of my clients by surprise. I think it caught by a lot of traders by surprise as well, because basically what it did was that, here's the S&P weekly chart. Okay, and again, if you study price action, which I use a lot in my analysis, what he has done for the past 1-2 years is simply make a series of higher high, higher lows, 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 higher high. So if you study price action theory, like I always mention, a series of higher highs and higher lows is a uptrend. Now what it did for this past few weeks of this month in October is that it actually made a lower low. See, you compare this low and this low, it made a lower low. Now a lower low might represent two things. Number one, either the market might start to consolidate, or number two, the market might start to reverse to the downside. Okay, so I was anticipating the market to, because there was a bit of conflict, because it has made a lower low compared to the previous low, yes. It has also broke a significant level of support around the 1925 level. Okay, so a lower low has been made. Alright, so I was expecting some form of consolidation, simply because even though a lower low is made, there was a nice bullish engulfing candle. Alright, if you go back to the webinar last week, you can watch what I mentioned. So basically there was a bit of conflict or signal. So it made me draw a conclusion that the bulls and bears were fighting it out over here. Okay, because the lower low was made, a support was broken, but at the same time a nice big bullish engulfing candle was formed. And I did mention that if the S&P managed to live above the 1900 support level, it means that this breakout might not be valid. Because every time when you see a breakout, right, let me just draw a, let me take my pen tool again. Now every time when you have a level here, if the market starts coming down and it breaks below it and it bounces back up to form some kind of candle like what we see here, like a nice big bullish pin candle. Alright, this shadow here basically shows that there's a lot of bullish, or there are a lot of bullish traders coming in, taking up all over again, because the bears try to push it down, When it hit there's some kind of support, it shot up and the candle cannot close below. It closed quite high up. So it shows that there's a lot of bullish momentum here. Okay, and when the market does something like this, bounce up from a bullish candle and starts trading above this key level here, it raises a question mark that, hey, this level here might be, or this breakout here might be a fake breakout. It might not be a concrete breakout. Okay, because if it's managed to stay above this key support level, which you thought it was broken, chances are that the market might still be bullish. And this is exactly what happened at S&P. So I use 1900, 1925 as my gauge because this level here, see all through this level here, right? There's a lot of support and resistance, a lot of key levels played out around the 1900, 1925. So when we start living above the 1900 for the couple of days, all right, you can see clearly on the daily chart, you're able to, I mean, you start asking yourself a question, hey, maybe the bulls are back in the market. And of course, what happens is that because of what happened with the BOJ announcement on Friday, all right, the bulls came back into play. A lot of cheap liquidity comes back to the market and they push it back up, and now we're testing previous highs. Okay, so let me take away my drawing tool again. Okay, so right now we are at a key level at 2015. Now before I talk about where we are, let me go to daily chart. Okay, so based on what I explained just now, these two levels here, okay, these two levels here around the 1900, 1925 was the level I was looking at. And you notice that once price broke above the 1925 level, it didn't break back below this resistance support, resistance and support, and it just continued upwards. Now, when the market moves like that in a big V-shaped bounce, right, I'm not too keen, simply because I don't like the way it moves. Right? It's a bit hard to tell who's in charge, especially when we are somewhere here. Okay, it's really hard to tell who's in charge because there's a lot of resistance here, but at the same time, the rebound looks pretty strong. So it's pretty hard to tell who's in charge, whether the bulls or bears. So as retail traders, if you're not sure, you might want to avoid the particular pair or particular instrument. All right, so how the S&P move for a couple of weeks, I was a bit unsure. I know there was a fight coming up, but right now it's clearly that the bulls are back in charge. Okay, so back to the weekly chart. Now we can tell that the 2020 level or the previous high is back into contention right now. And basically, the big question is whether we are able to push above and make a new high. Because if we are able to make a new high, chances are this channel that we drew a couple of weeks back is still in play, and we might come to test the next channel resistance or around the 2080 level. Highly possible. Okay, but right now, based on the price action, it seems that the bulls are in charge. Okay, but whatever it is, whether you're bullish or whether you're bearish, just take note. Again, I always repeat this every week. If you are bullish, you want to look for support to buy. If you are bearish, you want to look for resistance to sell. And right now, even though it seems that the market has turned back to bullish mode, we are at resistance. Okay, which means that you need to be careful because we are at resistance. And it's not the best thing to buy at resistance. Okay, I did mention it many times that whenever you trade, you need to plan. Don't just jump into a trade. So right now, yes, based on the last two candles, seems that the bullish momentum has come in, but we are at resistance. Okay, so let me just go to daily chart to have a closer look at the levels. Okay, how I do my analysis every week, I hope that, I incorporate live market into theories, into how I see the market. Hopefully, you guys benefit from it. Okay, and basically in trading, it's a lot about habits. And if you find yourself buying at resistance most of the time, most probably it's because of your habit. You always chase the market. All right, so be very conscious of your processes, your thought processes when you're trading. Be very conscious about your trading habits because you always, as traders, we always tend to repeat our bad habits. Okay, so what you want is to develop good habits and repeat it. So right now we are at resistance. One level to look up for is back to near the 2000 level, simply because it's a psychological level. And the other level I'll be looking up for is the 1980 level. Okay, so these are a few support levels that you want to look out for, and the market might come down to test the support levels, okay, before chugging its way back up. We'll see. Okay, but basically right now is testing resistance. So very interesting to see what happens at this 2020 level because it was a previous high. I'm not sure whether the market wants to take it higher. Okay, but I'm willing to wait and see. Okay, just take note, if you are bullish, either you let it come back down to support levels or you let it break out of this resistance level first and then take the entry. All right. So that's the S&P for you. It seems like the bulls are in play. The other one that I want to look out, of course, is the Japan 225, which is the Nikkei. Okay, this one was a really bullish. Look at the manner how we jump. This was this is a daily chart. No? See a daily chart. This was last Friday's candle. Really bullish after the BOJ announcement. Okay, basically when it comes to trading, right, the more unexpected the announcement is, the bigger the reaction, especially when the announcement is very clear cut. All right, I'm sure you guys seen some news whereby it's neither here nor there, like NFP, because NFP is always quite tricky because you have the unemployment percentage and you have the number of non-farm payroll jobs created. So sometimes it can be conflicting, and when the market, when both news are contradicts one another, sometimes you get a bit of a very mixed reaction. So it's not very nice and easy to trade. But when it comes to last week BOJ, very clear cut. We all know what Japan has been trying to do for the past 2 years. We all know what their measures will do to the market, especially the yens and the Nikkei. And last week caught everybody by surprise, which explains the intensity of the moves. Okay, so let me just get rid of this line first. Okay, so this is the Nikkei 225. Let me take you to the weekly chart first. Now, last week, I did mention that we were somewhere hovering around this candle, okay, and the 15, I think I mentioned 15.5 to 15.6 is a key resistance level, okay, because we were sort of consolidating, okay, so just ignore this big bullish candle here, but basically just focus on somewhere where we were here. Okay, so we were consolidating in this little ascending triangle. Now, ascending triangles basically is a flat top with a higher low scenario, and ascending triangle sometimes is a bullish, indicator. So where we were somewhere here last week, and 15.5 was a key resistance. Okay, and what happened is that we broke a key resistance level, and we came all the way up and broke previous highs of 2014. You can see that this high was quite significant, around the 16.5, tested twice, rejected, but right now we are broken significantly upward. Okay, so Nikkei very bullish at the moment. All right, if you look at this manner, this bullish engulfing candle, right, just look at this candle. This is a weekly chart. Okay, so I just want you to pay some attention on this, the length of this candle here. Now, if you look back on a weekly chart, how often do you see the same length, or where was the last time you see the same big green candle? Not really, you can't really see it, right? I mean, you got one big candle here, one big candle here, one big candle here. But basically, it doesn't match the magnitude and the size of this green candle. So it leads me to think that the Nikkei is very bullish. Okay, and we might be bullish for the longer term as well. All right, if you go back to the daily chart, all right, you can witness the size of candles again, very bullish. So right now, as traders, now a lot of my clients talk to me about the yen pairs and the Nikkei because the tendency for it to move without pulling back is very high. You guys agree? All right. Now I just have just a quick question. Now, how many of you are trading the dollar yen or the Nikkei at the moment? You can just type into the question box. Okay, how many of you are trading the dollar yen or the Nikkei at the moment, and how do you enter the trade? Do you just blindly buy, or do you wait for a pullback, or how do you enter the trade? Or which time frame are you looking at? Just some comments on the Nikkei and the yens. Anyone? Okay. Yep, I saw a few. I mean, some wait for pullback. Okay, good one, Justin. Bought dollar yen. Should be a happy man right now. Okay. Now, I did mention if you attend my seminars, webinars before, I always trade on pullbacks, right? Meaning pullbacks mean that if I look at a uptrend, right, I always wait for some kind of pullback before I will try to go long. Okay. Now for the Nikkei and for the yen pairs that have moved because of the BOJ stimulus, right? Just be mindful that a long term or a pullback on a higher time frame might not happen. It might not happen. Okay, later I'll illustrate a bit more on the dollar yen chart. But when the yen moves or when the Nikkei moves, it can be quite sustainable. And this brings to my point of using multiple time frame when you trade. Okay, if you look at the Nikkei here, okay, in between this rally here, there might be quite a number of pullbacks on the shorter term time frame. So if you are afraid that you are unable to catch the trend, let's say that okay, you look at the daily chart and you say, okay, bullish, maybe I want it to retrace all the way back to this previous resistance turn support level, and then from there take it up again. Yes, that is a trade plan. There's a possible trade plan, but of course the risk of pullback trading is that it might not come down to the level that you want. Okay, that's where you might want to ask yourself a question. Maybe do I want to trade it off the 1 hour chart and take 1 hour level support to bring it up again? Okay, so right now, like where we are right now, this is a 1 hour chart in Nikkei. We are testing a support level around the 1700, which is a, let me see which level is this, on the 16.9, let's say 16.940 level. Okay, and right now bulls might come in here. So this is one way to trade. You might want to lower time frame and look for retracements to take it up or take it down again. Okay, but of course it depends on your trading style and what your strategy is, but the time frame that you look at might help, especially for the yen pairs. Just the way it pushes up and up and up, it does not make much significant retracement. Same thing for euro dollar in the month of August, September. It just makes continue lower lows without any significant retracement on the daily chart. I think the retracement back to 128 only came about last month. But other than that, the only retracements that you see is only on the 4 hour or 1 hour chart. Okay, something to think about. All right, so just want to highlight the Japan to Nikkei and the S&P for indices. Any questions on indices so far before I move on to currencies? Okay, so no. Okay, what's this question? Okay, I have a question here on the Singapore blue chip. Let me just have a quick look at it. Yeah. Okay, let me just move on. This is the Singapore blue chip index. Okay, I got another question on Hang Seng. Okay, I'll get the Hang Seng quickly. So basically, this is a Singapore blue chip. As you can see, it's quite similar scenario to where we were last week after the webinar. Basically, it's consolidating. And I did mention that the Hang Seng, the Nikkei, the Singapore blue chip look roughly similar in the sense that we are trapped in this so-called ascending triangle formation. You see all the high lows here. And right now, the Singapore blue chip is testing a key resistance of 372. Alright, quite a simple analysis because 372 to me, if you zoom out on a weekly chart, quite a significant level here. Okay, so if it's able to break the 372, most probably it will come back to the previous high of around the 380 level, somewhere here. Okay, but if this 372 level gets respected, most probably we're coming back down to test the trendline support around 360, which is back to consolidation mode. Alright. If you look at the daily chart, right now, daily chart seems very bullish. It has made a higher high, higher low, another higher high. So right now, we are at the key level. Okay, if the 370 level is able to break significantly to the upside, then chances are we are going back to the previous high of 380. Okay, so that's the Singapore blue chip. Okay, Hang Seng now. Let me just go to Hang Seng. Hang Seng quite similar to last week as well. Let me just go to the weekly chart. Okay, last week we were testing this key level of resistance, 23,600. All right, right now we are testing another level of resistance around the 24,000 level. Okay, so just two levels to look out for the Hang Seng. If you see the Hang Seng looks quite similar to Singapore blue chip, isn't it? Right now, to me, it's just consolidation. All right, but if we break this key resistance, then again, same similar analysis as Singapore blue chip. If it breaks this key resistance level, then most probably we're coming back to test at 25,000. But right now, it's just consolidating in a weekly chart. Okay, daily chart, you can see a daily chart has reversed itself to the uptrend. How I tell whether the market is on an uptrend or downtrend? Simply by price action. So if you see that it was on a downtrend here, a significant low here was broken, push all the way down, lower lows form, pull back, form a higher low. So this was the first level of a first sign that the downtrend might be a bit tired. Of course, there was a support trend line here as well. Form another higher low, still no higher high because the same high, and now he's formed a higher high. So daily is an uptrend, weekly is a consolidation mode. To confirm the daily uptrend, we need to break the 24,000 resistance, because if we are able to break above this level, then most probably we are testing new highs of 25,000. So that's where the daily, the uptrend shows that is, that's where the market shows that it's a bit more bullish than neutral when it comes to the Hang Seng. Okay, so take note of the 24,000 level right now. However, if this 24,000 level is respected, meaning that if you see the daily chart, still mucking around this level, not knowing what it wants to do, and then make a lower low and breaking all these key lows, then most probably we are coming back to test the trendline support around 23,000. All right, so watch out where we are right now at the 24,000 level to look for signs of what the market might do. Okay, so that's the Hang Seng. Of course, the Hang Seng is in quite a tricky situation because of the protests and what's happening. So just be mindful, because news can always change the entire technical analysis. All right. Okay. Can you illustrate using a dollar-yen pair using the Nikkei 225 analysis just now? Definitely. Once I move on to the forex analysis, I will touch on that. All right. Okay. So moving on. Oh, DEX. Sorry. Okay. Let me just cover DEX as well. Okay. DEX is a German index for those of you who are not familiar with it. Okay, now the DEX is slightly an easier read than the S&P or the Walls or Dow Jones for me, simply because the pullback wasn't a total reversal. Okay, now I did mention in the previous webinar that around the 9,000 level is a very key level to watch out for. Now what happened on the DEX weekly chart? Yeah, it did a very nice break below the 9,000 level, and you see this candle is a bearish engulfing candle closing below a key resistance level. So I was a bit more bearish for the DEX. But what happened was that this 9,000 level was broken. The market's pushing back above it. So it broke below it, and then it broke above it again. Okay, so it's a bit mixed bag for the DEX right now. It's not as clear. Right now, I would say it's a big consolidation. That's why I mentioned in the beginning of the webinar that I don't really like how the indices look like, simply because of how the price action is looking at. Okay, right now the DEX now it was consolidating here. Right now it might be a start of a downtrend simply because it made a lower low. The key question we want to ask ourselves is whether this is a lower high, because if this is a lower high, then there might be a possibility whereby it might start breaking down once again to form a lower low, to form a continued downtrend. Either this, or it might form some kind of chart pattern to consolidate in. Alright, something like that. I think I drew this last week as well, so it's not a nicest channel or trend line, but it's just something that you want to look out for. Okay, because when the market hits the top and it gets exhausted, right, very often it consolidates. Okay, so what you want to look out for is something like a flag or channel, just like that, which means that we might make a bit new high around the 9480 before coming down again. Okay, so the DEX is a bit of a consolidation mode it's not as bullish as the S&P or the Dow Jones, but it's a bit more consolidation at the moment. Just take note of this potential channel forming. Okay, but the 9,000 level, which I identify as a key level, caught me by surprise, caught many traders by surprise because it broke lower only for it to break back above it. Okay, so when the market do something like that, just got to take a step back and analyze and see and plan another trade altogether. Okay, so that's for the DAX. Sorry, Mr. Tiam. DAX, sorry, lower high, forming higher. Yes. Higher low, no. Okay, the DAX, this is called lower low. Okay, this low compared to this low is called a lower low. This potential high compared to this high is called a lower high. So whenever a new lower low is made, if you want to, if you a trend is going to continue on downside, it will form a lower high, and then it will come down again to form a lower low. Okay, so right now where we are, even if it hits this trend line resistance, as long as this high is below this high, it's still a lower high. All right, the difference between the DAX and the S&P is that the S&P did something like this. It consolidated, it made a nice lower low, and it recovered all the way back to form a near back to the previous high. All right, so it's a bit more bullish than the DAX. The DAX simply made a lower low. Oops, sorry, let me just draw that again. Okay, the DAX did this. So it consolidated, it made a lower low, and it pulled back slightly above to the significant level, but it's still a lower high compared to this. As compared to S&P, it pulled back all the way to the previous high. So this one is definitely more bullish than this one. Okay. All right, this is a bit of price action. Now, if you guys are not sure of price action, all right, you can because the webinar is more for it's a lot of live markets, and I try to incorporate price action as part of it. But price action is a big part of how I see the market. Okay, so if you guys like what I do conduct some seminars every now and then. If you just Google or just search for price action, I have a few articles that I've written on the IG website as well about price action. So try to read up, and hopefully during the live webinars, I'll be able to explain more. Okay. So moving on to the forex pairs. So let's have a look at the center of the focus right now, which is dollar yen. Finally, it has a bit of retracement right now. But look at the weekly chart. All right. I remember we were discussing here. It was making it was quite bullish. It was when it broke the 105.50 level. All right. It came down, made a higher low, and now it made a higher high. So if you use price action to analyze, what it has done simply is make a higher high, higher low, another higher high. The big question is, where would be the high low? Would it pull back all the way here before going up again? This is scenario 1. Or would it just make a very shallow pullback before going up again? Or would it fizzle out and consolidate here? Oops, sorry. Okay, so these are a few scenarios that might happen. All right, right now, based on the fundamental outlook, it is very bullish. The job as a trader for you is basically where's a good support level if you're bullish. Okay, now how many of you are bearish? How many of you here are bearish? That means how many of you see a big green candle here and say that I want to short? Anyone? It's not wrong, yeah. So don't be ashamed to admit it, because I see a lot of clients trying to counter trend a very trending market, which is not wrong, but you just got to be very careful and very aware that what you're doing is counter trend. If you're planning to take this as a bearish trade, okay, I have one. Justin, yeah, you're saying that you short it for a while. Yeah, I mean you can do that. So sorry if you don't mind me using your name, yeah, Justin. So Justin says that he doesn't mind shorting it for a short-term trade. Okay, so let me just take this away. So weekly is bullish. Okay. Daily is bullish. 4-hour chart is bullish. 2 hours chart is bullish. 1 hour chart is bullish. And 15-minute chart is slightly consolidating to the downside. Okay, so why did I say that 15-minute is consolidating the downside is simply because this was the previous low. It has broken a new low here. And you notice that price action applies to any time frame. Okay, remember I showed you the DAX just now, and I did mention that for the DAX, it consolidated to double bottom, it made a new low and 9,000 levels. It was 9,000 level I was looking at for it to come down again. Of course, what happens is that it broke above. Same scenario here. Market consolidated, broke a new low, and you notice this level here, this level around the 113.70 level, this whole level here. You notice how the support became resistance because it broke below, pulled back, became resistance, and came down. Now this is what I call classic price action change of trend, whereby the market consolidates, makes a new low, pulled back to the previous support term resistance, and comes down. Okay, of course, right now it came back and mark around, but let's just not ignore that for a moment. Okay, because in the shorter term time frame, there's a lot of noise. But what I just want to highlight to you is how the market changed the trend. Okay, because when it changed the trend, this is a very classic. You can call it a 1, 2, 3 pattern, an ABC pattern. I simply call it a price action pattern. Okay, it made a new low, pulled back to the previous key level, and broke down again. All right, so this is something that you want to look out for when you're looking for a reversal. Justin, if you short on the 15 minutes, yeah, it's a good setup. Okay, but just take note, because the market doesn't work on one time frame, essentially all the other higher time frames are bullish. So every time when it comes down to a new level of support, the bulls will start taking it back up again. So just be mindful that you're counter trend. But if you're taking the short based on this change of trend here on the 15-minute chart, then that's a very good play. That's a good setup. Okay, because this applies to short-term charts, long-term charts, any time frame, even the monthly time frame. All right, every time a key support level is broken, it pulls back to key level of resistance, support term resistance, and continues. Later, when I take you to the silver chart or the gold chart, it's exactly what's happening. Okay, so this is something that you want to look out for as a trader. All right, a bit of price action lesson for you. Okay, let me just go back to here. So yes, you're right, 15-minute is on a downtrend, but once it breaks above this 11370 level, then most probably it might continue because all the other time frames are supporting it up. Okay, so always be mindful of other time frames. The reason why I went through different time frames is because I want to show you counter trend trading is slightly more dangerous, slightly more advanced. Be very mindful because you're trading against a lot of the other time frames. All right. So this is a 15-minute chart. Okay, so different time frames can paint different stories. So as long as you know what you are trading, what's your plan, what's your target, where's your stop loss, is fine. Okay, because I notice a lot of clients, let's say they look at the 15-minute chart, okay, and they're totally oblivious to the high time frame. They say, oh, 15-minute change of trend, all right, it's coming down, I'll take a shot right here. Okay, and what happens is that when the market starts going up and higher, even when it breaks previous highs, they are still stubbornly holding on to the short. Okay, hoping that the market will come down again and for them to earn some quick profit. Okay, so this is a classic example of trading without a plan. Because you are just trading on the short-term chart, totally unaware of what's happening in a higher time frame, and even when the market goes totally against you, back to and broke previous highs, you're still trying to hold on and trying to hope that this thing will happen. Okay, that's not a good trader. All right, as a good trader is somebody who knows what he wants to do, what's his plan before he even executes the trade. So be very, very mindful of which time frame you're trading on, what's your expectations, what's your profit target, and plan the trade accordingly. All right, don't hope. All right, because the market doesn't wait for you, or it doesn't give you back. You keep hoping. Okay, very dangerous mindset to have. All right, I see this a lot in many traders, which is why I always emphasize this to clients. Okay, so I have more questions coming up. All right, no problem, Sulian. I'll be happy to share more on shorter term trades. Okay, Sunil, do you maintain any kind of journal for your trades? If so, can you share what the parameters? Sure. Now, in terms of journaling, right, very simple. How I have my setup is simply, let me just take away the pen tool. Okay, I have more than 2 charts, all right? Because for webinar's sake and because I want to cover a lot of markets, I just have 2 charts to keep it simple. But I essentially have about 4 charts on the screen. I start on a weekly, daily, 4-hour, and maybe 2-hour. Okay, so what I do is that whenever I enter a trade, after I'll take a screenshot and I will paste it on a PowerPoint slide. And what I do is that every weekend, so let's say in a week, let's say I take three to five trades, I have a lot of screenshots on the PowerPoint chart, on PowerPoint program, and every weekend I will review it according with my trading statements as well, to see where the entry, where was my entry, where's my target, where's my stop loss, the result. The reason why screenshots are useful, you can do Excel sheets as well, and it's good to have both actually. I have both. I have an Excel sheet that have all my winners, losers, lots, how many size, what's the size I trade, the date. The Excel sheet is mainly to compute at the end of every week or at the end of every month in terms of just is for you to analyze what kind of trader you are. All right, whether your shorts were more successful than your longs, which currency pair you traded better, you know, how many percentage of winners you have, and in terms of the winners, was it 100 pip type winners or was it a 10, 20, 30 type pips of winners? So that's where the Excel sheet comes in useful. But for me, the more useful journal will be the screenshots, because screenshots helps you visualize and conditions your mind on what's a good setup and what's a bad setup. Because many times down the market is random. Okay, the only times that differentiate our winning and losing losses is basically the probability, the edge, the trading strategy that we have. And sometimes when we follow our strategy exactly, but we still lose money, on the screenshot that you taken when we place the trade, you are able to tell that, okay, this was a good setup, I will still take it any other day. It's just that at that point in time, a news came out and the market moved against me and stopped me out. Okay, so you're able to see that and you're able to tell yourself that, okay, it's still a good setup regardless. It's just that I was unlucky. All right, so screenshots are useful. So do you have 4 screenshots for each pair? No, when I say time frame, so for example, if I look at dollar yen, I'll be looking dollar yen at 4 time frames. If I look at euro dollar, I'll be looking at euro dollar at 4 time frames. All right, so each pair will have 4 screenshots, or maybe more. All right, depends. Okay, so that's how to take some journal. I mean, moving along. I mean, if you have time, I can show you some Excel sheets that I have to help you in terms of your journal. So, but journaling is very important, very important in trading. Okay, so that's dollar yen for you. Where was I? Sorry, I always sidetracked too much. Okay, so back to the live market analysis. So dollar yen weekly is very bullish. Okay, now if you look at the daily chart, because when you analyze such a chart, right, if you zoom out, okay, the next level is what? Near the 115. I think there's quite a number of analysts saying that 115 is a key level. Let me just draw a line at 115 and see why they're saying that. Okay, not surprising, because if you pull back, okay, maybe I should go to a monthly chart. Okay, because it's so bullish that you can't even see on a weekly chart anymore. So the 115 level is somewhere, yeah. Okay, 115 is somewhere here. So sorry, I don't know why my line doesn't want to draw. Okay, and not surprisingly, why they said 115. I mean, if you look at the number of support, resistance, support, resistance, possible resistance. So a lot of analysts did mention that 115 seems to be a target. Let's go back down to the weekly chart. Okay, so if you can't see any resistance on a particular time frame, you need to move higher up to try to plot. Okay, so weekly chart is bullish. Daily chart is very bullish as well. So how you want to take a dollar yen if you're bullish is either you want to wait for a longer term pullback, okay, maybe back to this little gap here. All right, maybe back to the gap and probably push it back up, or let me just look for. See this gap here? That was on Monday. All right, a bit of a gap up. And basically, sometimes based on gap cover theory, the market will tend to come back down, cover the gap, and continue upwards. Okay, but if you think that you don't want to miss the trend, and you think that the trend continue upwards, which happened quite a bit on dollar yen and yen pairs, then you might want to look for shorter term time frame pullbacks. okay, which is happening right now actually. This is a 1 hour chart, okay. Not much to analyze, but basically the support levels around the 113 and back to the gap cover around the 112.40 level. Okay, so anywhere here is potential support for the market to push it up again. Okay, but just take note for yen pairs and Nikkei especially, it always retraces on shorter time frame before continuing upwards or downwards. All right, so that's the dollar yen for you. Very, very bullish. Okay, so euro dollar. Okay, for the euro dollar, let's go to the weekly chart. Sorry, Lenny has a question. Does the gap up or down need to be closed for Forex and stocks? Now, gap trading is, I mean, there's a theory behind it. Basically, when there's a gap, more often than not, the price will come back to cover the gap before continuing the trend. Okay, it's called a gap cover trading. It happens to Forex, it happens to stocks. Not so much for stocks, I would say, because sometimes gaps are caused by dividends or earnings release. You need a lot of liquidity for gap covering strategy, and I'll say based on my experience, I say it happens more or towards the Forex or indices even rather than stocks. Okay, but the main thing for dollar yen is that it's quite hard to plot any form of support based on the charts. Okay, which is why I just use the gap area to look for potential support, because many times on the dollar yen, the way it moves, it just pull back on a short-term chart and then it just continues upwards. So those are levels that you might want to look at. Okay, so just be mindful. Of course, if it breaks through that level, then yes, we might look for more significant pullback. But for now, I'm just looking at those support levels to see what happens there. Okay, euro dollar. Now, euro dollar, this is a very classic pullback trading, which I really love. Okay, weekly chart. For those of you who have waited for any pullbacks from 135 and did not get a pullback and waited and waited and waited and waited and waited, this was a pullback for you. Okay, it happened after 1 month of downtrend, pullback in the month of September, so in the month of October. 128 is not rocket science. Anybody can see that 128 is a key level. Why? Because you got support here, you got a bit of a fake out here, you got support, turn resistance. All right, and you notice without any indicators, just a plain chart, there's no surprise that the 128 was respected. All right, ignoring anything, no indicators, no news, nothing, 128 was a key resistance on a weekly chart. And what happened? It came down. So for those very long-term traders that has been waiting for a pullback all the way from 134, this was your opportunity here, 128. Okay, I did mention 128 as a key level from webinars weeks and weeks ago as well. Okay, of course, the tricky part was that it did pierce through slightly all the way to 128.60, 128.70, but then it came down again. Okay, don't forget the analysis is on a longer time frame. So again, I did mention when I'm talking about support and resistance levels on longer term chart, always think of it as a zone, not a specific level. Okay, so, and if you look at the candlestick, if you see a long shadow piercing it through, this resistance is still valid unless you see a body close above it. If you see a long shadow, it is still valid. Okay, so looking at the daily chart, you notice how it reacted at 128. This was the 128 level, isn't it? Okay, and even without any indicators, right, this was a bullish engulfing candle. Yes, if you at this point in time, you say, okay, Nabil says that 128 is a key level to look out for. However, the daily chart shows a bullish engulfing candle, then you might be a bit wary, okay, because there's a bit of maybe the daily chart does not want to bring a price down for 128, even though I know that 128 is a key resistance level. Okay, but if you move forward a bit, okay, these two candles doesn't tell much. Daily still looks quite bullish based on this candle, but at the back of your mind, you know that 128 is a key resistance. Okay, still trying to push up. Look at this candle. You notice how the past 1-2 candles couldn't close above the 128 level? Alright, this candle was bullish, yes, so this was a candle whereby there was a bit of a fight, but this candle clearly showed that it couldn't break above the 128, and there's a there's a bearish engulfing candle engulfing the previous green candle. So this is the first sign that the market might start coming down from here, 128. And what happened was that this was short-term support, right? 126. Oops, sorry. Okay. And what happened was that if we move forward, came down, broke the 126, and came back to the previous low. Okay, so whenever I highlight key levels to you, right, whether I highlight on a weekly chart or daily chart, don't just jump into the trade. All right, I always tell clients buying at support and selling at resistance just like that is not a strategy. It's just an analysis. Okay, if you think that $1 is a support and the price comes down to $1, you just close your eyes and hit buy. That is not a strategy. Okay, support and resistance is simply an analysis. So if I say that 128 is resistance around the 128 area, depends on your what kind of trader you are, depends on what time frame you're looking at. Look for a lower time frame to confirm your bias on a higher time frame before you take the trade. So this is a classic example. So weekly chart, 128 resistance, overall downtrend. Daily chart was a bit stubborn first, but then it began to show signs that it was weak, and it came down, made a slight pullback, and came down again. Okay, I think last week what I mentioned was that there was a bit of a bearish flag here, didn't I? And a bearish flag is a continuation pattern. All right, so this is another sign that this was another sign that the bears might be in charge again after the bearish flag form. Okay, this is a classic chart pattern: bearish pole, bearish flag, continuation. Okay, so right now where we are is simply we are testing previous support at the 125.00 level. Okay, now I don't know what ECB will announce on Thursday, but what I know is that the charts are still very bearish. Okay, and right now 125, the interesting thing is this: we broke below 125 temporarily and formed a little bullish pink candle here. So I'm not sure whether the bearish momentum is strong enough to push it, make a convincing push down below 125. For that, I need to have a look at the lower time frame charts. Okay, still very bearish. All right, this is a 4-hour chart. All right, this was caused by the FOMC. Okay, pulled back, came down again, and right now we're testing a key level at around the 125.00 region. If you notice, for the past 1, 2, 3, 4, 5, 6, 7, 8 4-hour candles, the 125.00 we are not able to break above. So once this 125.00 level holds, most probably we might make a new low. However, if this is broken, okay, either we might come and cover this gap, this little gap on Monday before coming down lower, or it might make a slightly bigger retracement, maybe back to the 126 resistance level. Okay, just be mindful. Don't be so excited. You say, oh, break a new low, just close your eyes and short. Based on the candlestick patterns, it's a bit consolidating. So just have a key look at 125 first. If it's managed to stay above 125, then you need to look at the another resistance levels. But overall, the trend is definitely bearish to the downside. Okay, we might even have something like this. Take away the flag, it's not relevant anymore. Okay, so just be mindful of this. If this 125 level is broken up, high chance it might start coming up and it might hit this trendline resistance before continuing downtrend. Okay, so use this trendline resistance, a bit of a wedge consolidation as your guide. Okay. Sorry, Peter, you have a bearish flag is a continuation. What about pennant? Same thing. Okay, a bearish flag, the flag can be a channel or can be a pennant. All right, there are many chart pattern theories out there, but one thing for sure, bearish flag is a continuation, whether it's a pennant or it's a flag. So meaning that if it comes down, so you establish a downtrend, sometime will consolidate here. This area here can be a flag, or it can be some form of consolidation pennant, like a wedge. So my drawing is not the best, but yeah, you get what I mean. It can be a pennant, it can be a flag. It's still continuation. Okay. And bearish flags occurs a lot, yeah. Occurs a lot. It's just that a high time frame, you need to be a bit more patient. Okay. So yeah, so take note of this line for the euro dollar. Interesting level we're looking at. Okay, where we are right now. Let's go to Aussie dollar. Okay. Now, Aussie dollar, let's go to the weekly chart. Looks very similar to the euro dollar, and I did mention last week the daily chart was in a bearish flag, and look what happened. It continued. So same thing. Aussie dollar made a new low, came all the way down, tested the 2014 lows of 86.50, pulled back to the 89 cents level, and again, this, for those of you who are waiting for pullbacks on longer term type of trade, this area was not surprisingly why it reacted. In fact, twice it tested. Okay, so weekly chart still on a downtrend. Whether we are able to break 2014 lows yet to be seen. Okay, looking at the daily chart, and this is what I drew last week, didn't I? I drew something like this. Okay, you can see this as a bearish flag. Okay, or you can simply see this as a triangle consolidation. Okay, but whichever way you see it, the pattern is still a bearish flag and it's to the downside. And what happened was that when we broke a short-term support level, I think it was around the 87.50, it confirms that the consolidation has broken out and the market most probably come back test previous low. That was my analysis last week, and it happened exactly. Okay, the support trend line was broken and it came back to test the previous low. So very similar to the euro dollar analysis. Right now, the key question is whether we are able to break the previous low. Okay, because if not, it's just consolidating this big fat area between the 86.50 to 89 cents level. Okay, so if this level is not able to break, all right, then most probably we are going to drift back all the way up and maybe make a bigger retracement. Okay, but right now it's just very range bound for the Aussie dollar. Maybe China news this weekend on its trade balance will move it a bit more. So we'll see. We'll see what happens on that. All right. So any more currency pairs you want me to go through? If not, I'll cover a bit of commodities because gold and silver are quite interesting setups or quite interesting analysis to look out for. Any other questions on FX? Okay, if there's nothing, let me move on to metals. Yes. Julian, metals. I love my metals right now. Euro Aussie. Okay, Sunil, Euro Aussie. Let me just do. Where is the next? Okay, I have a question on Aussie dollar. So since I talked about Aussie, let's look at Aussie now. Where is the next stop if Aussie dollar breaks below? Good question. Where is the next stop when Aussie breaks below? For that, the daily chart does not give me insight. Let's see, the weekly chart does not give me much insight as well. Okay, let's see whether there's any. Okay, now the next level for Aussie dollar I'm looking at is around the 85.50 level. Let me just confirm that from monthly chart because it's so bearish. I need to go to a higher time frame. Yeah, around the 85.50. It's not the strongest levels, but I'm just basing it on these touches here. This little shadow touch here and shadow touch here. So if you draw a line, you go back to a weekly chart. Okay, if I bring it back to the weekly chart, let me zoom out a bit. You can see that the 85.50 is here, touches here, support, resistance, support, around the 85.50 level you have to look at. And after that, of course, the 85. Okay, but it seems very bearish at the moment if the 86.50 level does not hold. Okay, the next level I'll look at is around the 85, yes, 85.50 and 85. All right. Okay. Oh, Sunil, you say 8065. Yeah, that's still quite far off. 8065 is somewhere here. Let me just zoom out a bit more. $8065. Yep. Mr. Sunil said the next level of support is 8065, which is around here. It's a nice level of support. You got a bit of resistance here. You got a bit of support here. Yep, all the way here, but it's still quite far away. Okay, so I'm looking at 85 cents first, so step by step. Okay, but yes, the long-term target might be there because the 85.50 level is not the strongest. Okay, so it's a decent level to look out for if you're a long-term trader. Okay, but definitely on a downtrend at the moment. Yep. Okay, so there's the Aussie dollar. Okay, let me just do a quick one on the Euro Aussie and then move on to metals. Lenny, you mentioned stocks, right? I'm so sorry. Today my platform is not cooperating with me. I do not have US stocks on the platform today. I'll sort it out next week. But if you have any Singapore stocks, I'll be more than happy to look at it for you. Okay, so Euro Aussie. Okay, now Euro Aussie based on the weekly chart, right? Okay, it's a bit tricky here. Weekly charts in a downtrend here. Simply hit lower low. See, you see. Let me just go through price action so that you guys are familiar. So it made a higher low, higher high, higher low, higher high, same low here, and then it made a lower high. First indication that the bulls are exhausted. A bit of a head and shoulders pattern. It broke a key low here, so that's the first lower low, lower high, lower low, lower high, lower low, higher high. So in this little setup here, there are three change of trend. For uptrend, consolidation, downtrend, uptrend. You see that? So when this high was breached by this high, this level here is a bit of a change of trend. Now, whether this is a clear change of trend is not sure yet, simply because this it must be confirmed by this level of support. Okay, this level of support around the 14240 level. All right, this is a potential high low, because if this low is confirmed, what it is doing is this. Okay, if this 1.44, this is the 1.4240 level is supported, then most probably the uptrend will continue. However, if this level here has broken down, then this level here might be a not change of trend, might be a fake out, and it might come back all the way down to the support level here. Okay, so it's a bit tricky on the Euro Aussie. For me, the key level to watch out for is this horizontal line around the 14240 level, and see what gives over there. Because that level is broken, the trend, the change of uptrend here might not be as significant. Okay, let me take a look at the daily chart. Okay, you see daily chart is a bit different. Daily chart is on the downtrend. Okay, because it has broken a low here. So the daily chart's on downtrend. So see lower. So basically a lower low. This might be a lower high. And let's see whether it comes back to test here or comes down, or it comes back to test here and starts going up. Okay, so this level, this line that I drew is quite an important level. Anywhere around the 14200 to 14240. This whole level here. Okay, because daily charts on downtrend, weekly charts on uptrend, a bit of conflict. Not the best trending chart to look at the moment, but this key level will determine what will happen to the pair. Okay, so that's Euro Aussie for you. Now let's move on to metals. Very, very interesting stuff we have right now. All right, let me firstly touch on silver. Okay, now on the silver, if you attended my first webinar all the way from, was it in September or August? Okay, I mentioned that silver has broken a very, very key level at the 1850. All right, and when there's a key long-term chart breakout, right, it's very significant. Especially, this is a monthly silver chart. Okay, it's a monthly silver chart. When there's a key breakout on the monthly chart, it is a significant level. Okay, look at this monthly chart here. If you look at the 1900 level, this which year was this? This was 2009. You notice when it broke above it, in 2010. Sorry, let me just disable this. Yeah. Okay, sorry. You notice when it broke above it in 2010, it just continued all the way for the whole year. Okay, same thing for here. This is a monthly chart, by the way. So for those of you who aspire to be super long-term traders, something for you to think about. Key level here, around the 2650 level. You notice that it tested many, many times. 1, 2, 3 support, tested 4, 5 times. 2013 March, nice bearish engulfing candle break below the 2650 support level. And what happened for the whole year? It just continued down and consolidated. You see that? Now where we are right now, very similar to the previous two scenarios. The key level that I drew a month ago was around the 1850. It broke below. Very nice confirmation with a candle close below the level on the monthly chart. And the monthly candle is very significant. And right now we're just drifting lower. Okay, that is why I gave a heads up 1 month ago on silver has broken a key support level. Alright, looking at the weekly chart, you can see a bit more clearer. Alright, I did mention that it made a series of lower highs to show that the pressure is still to the downside. And this was a clearer look at how it broke. And there was a slight pullback and breaking down. Now, pay very close attention to this chart I'm talking about right now, because I'm going to incorporate a bit of price action to it on how you form a bias. So, let's say if you're looking at silver. Okay, my bias was bearish since a month ago when it broke the key level. The big question is, how do you want to take the trade? Okay, so the very important thing about price action is that I want to use price action to form a bias. And forming a bias on longer term time frame is very important because it keeps me focused on what I want to do. Alright, so that I won't sway, you know, I won't get swayed by any key news or any sudden move in prices. As long as this 1850 level is below, as long as we're below, and as long as there's no pullback break above it, I'm still bearish. So that's where a long-term chart and bias and price action is important. I'm bearish. So the question is how to take the trade. So if you go to the daily chart, how we broke downwards is that it just simply made, look at that, lower low, lower high, lower low, lower high, lower low, lower high. It just drifted downwards. Alright, you can always say that, oh yeah, maybe it, you can say that it drew a bit of, it has a bit of a trend line and things like that. Okay, but this is where you start to pick up little evidence to support your bias by going to lower time frame. So this is a daily chart. But in the back of my mind, I know that I'm bearish when it broke this key level already. So this question that I want to ask myself is this. Okay, if I'm bearish and I want to short, where are the levels of resistance that I want to short from? And that's where the shorter term time frames will give me a bit of a clue. Daily chart, what does it give me? If you draw this trend line here, of course, on hindsight, it's easy, but I'm not talking on hindsight because I mentioned this a couple of weeks ago. And to find clues, let's say if you're bearish, you're just looking for resistance. So this is the first sign. Trend line, quite a nice trend line, many touches. This was the first sign. Okay, a trend line on the daily chart. So this is the first level of resistance that it might come down from. Okay, maybe not this one, maybe not this one. Of course, on hindsight, we know it's this one, but I'm just saying this is the first sign of resistance. Second level of resistance is when the market started to consolidate a bit around the 1750 level. You notice that, you see, it came down, tested, couldn't break. So this whole level between the 1750 to 1765, 1770 level, this whole level here was resistance as well. Okay, this was another key sign that you might want to take note of, that it was resistance was still in play, which means that it was still supporting your bearish bias to the downside. Okay, of course you can say that someone might use Fibonacci. You can say that, okay, I draw this straight from here to here. You notice that 1750 coincides exactly to the 1750 resistance level. Alright, and you can use anything. Okay, but what I'm saying is this: use price action and support and resistance to form your basic analysis and your bias. From there, you can look for evidence on whatever indicators that you like to use, Fibonacci or anything like that. And if you notice that just simply by Fibonacci, support and resistance and different time frame, this level here, there's confluence level of resistance here. You got trendline resistance, you got visual horizontal resistance, and then now you got Fibonacci retracement level resistance. And some say that, hey, 1754 is a whole number, so it can act as a psychology resistance as well. 4 factors. Just by plain analysis, you got 4 different levels of this confluence resistance here. Alright, so you see how I plan my trades. So once I have the bias, that's where I look for clues on low time frame. For those of you that were unable to spot those resistance levels, never mind. Let's go to lower time frame. Let me show you something else. So again, the bias was always bearish, yeah? Now what happened here was that the silver consolidated for a period of about 2 weeks, and form a consolidation from 1765 all the way to 1708 level, around there. Okay, you see this whole level here? Consolidate, 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 consolidate. This was the key level of resistance I was talking about around the 1750. But if you couldn't pick that out, what it did was that when it broke this key level support here, it's a further confirmation that the bears are in charge, and it continued downwards. So all the trade plan that I mentioned just now, all of it is based on one bias, which was bearish, which was formed a month ago. So you see how the plan comes to fruition. So basically, as a trader, planning is very, very important. Okay, so if you are able to plan and look out for evidence to support your bias, you will know when you are right, you will know when you are wrong. Because I know that when I'm wrong, if it breaks above 1850 level again, all right? But when the market confirms with your bias is a beautiful thing, because if you're able to spot it, right, some of you might short it at the 1750. When it broke a key level of support, you might add on to your shorts here. And by the time your shorts here will be in profit, you can move into break even, you add on to shorts here, and you will accumulate a very, very nice trade to the downside. Okay, so I'm using silver as an example because I'm just showing you how to have a trade plan in terms of forming bias all the way to finding evidences to support the trade plan and taking the trade. All right, so that's silver. Any questions so far based on the theory or based on what I'm explaining? Okay, any questions? Okay, Lina, sorry, when you say you're a swing trader, how long do you hold your trades? Swing trade anywhere from a couple of weeks to a couple of days. Okay, I would say that once it goes past 2 or 3 weeks, then maybe you can consider yourself more of a position trader. Okay, a bit subjective there, but I would say a couple of days, couple of weeks. All right, normally a couple of days or maximum one week, depends. All right. So that's silver for you. Let me go to gold now. Okay, sorry, a few questions coming. For silver, when's the next outlook to enter? Okay, right now, oh sorry, I was explaining about strategy. I forgot to do analysis on silver. Okay, sorry. Now, silver, right now, the tricky thing is that it's testing a key level of support. I need to zoom out the weekly chart to show you that. Okay, so sorry. So if you notice that now, let's say 1600, around the 1600 to 1630, right? There's a bit of support there. Let me just draw it here. Okay, somewhere here. Okay, you see there's a bit of resistance here, turn support, turn resistance, turn support, and not surprisingly, this level was respected. Okay, so this is a very long-term outlook. I'm just zooming out the chart so that I can find a key level to look out for. Okay, now look at the daily chart. A big consolidation. Okay, the question you want to ask yourself is this. I mean, because the long-term support is anywhere from the low that we made around 1570 to 1600. If you are planning to take a short here, for example, okay, the big question you should always ask yourself is, where's my stop loss? Okay, if my stop loss is going to be above here, to say that, okay, if the silver U turns all the way and breaks a new high, the previous high, then I'm wrong. Does it make sense? It doesn't make sense. Why? Because your profit target right now, where you can look out for is the previous level support, which is anywhere here from 1600 to 1570. But your stop loss is all the way here. So if that's your trade plan, it doesn't make sense. Okay, so if you want to have a bigger profit target, then that's where you need to be a bit more patient. Okay, so this is a daily chart. What you want to look out for is the previous level of resistance. Now, what we can infer based on this chart is basically around the 1670 level. Okay, and don't forget this trend line which I drew. It might still be valid. It might retrace all the way back to resistance, coincide with the trend line, and maybe it will come down again. Whether it will break new low, I'm not sure, but it might come and test the previous low around the 1580 level again. Okay, so just be mindful of the resistance level. This previous touch was around the 1670, so just take note of that resistance level. Okay, this is on daily chart. Of course, if you want to trade short term, there are other short-term resistance. Okay, short-term resistance is around this level here, 1620. You can see that it's tested a few times, came down, tried again, came down, tried again yesterday, came down. So short-term level is 1620, but if we break 1620, then it might retrace higher, maybe back to 1670. So those are the resistance levels you're looking at. Okay, so again, what's your trade plan? What you're looking for? What's your risk to reward? All right. Now let me touch on gold. Now it's down. So for longer term investor, we should just monitor and see if it move up to 1650 before we enter to short. 1650 means 1670, is it? Okay, if you're a long-term trader and you're looking at the charts, right? You should always base it on longer-term chart like daily or weekly chart. Okay, simply because of your risk to reward ratio. Alright, sometimes the pullback might not be significant enough, but if you base it on daily chart, you just ask yourself, okay, where's the daily level of support resistance? Around the 1670. Okay, maybe I'll look up for that level and see what happens there. Okay, because if you were to enter any trade right now, it's very close to long-term support levels. So I wouldn't call that a long-term trade unless you're scalping or intraday, then it's possible. But if you're looking for a long-term trade, the profit target right now is only, what, about 20, 30 points away? Okay, so it's more of like intraday trade. So if you're a longer term trader, yes, you're looking for daily and weekly support and resistance levels. So for this case, resistance around the 1670. Yep. Okay, let's move on to gold and then I'll take any last questions before I wrap up. Now, gold chart is quite similar to the silver. It's just that the difference from gold and silver is gold just made a new significant low compared to silver, which broke the 1850 since last month. Okay. I mean, the whole reason why metals or gold especially is very bearish is simply because inflation is not a concern for most of the countries. Therefore, gold has lost its favorability in terms of being an inflation hedge. Okay, so the key level for gold was around the 1180 level. All right, same analysis, a monthly chart. Let me take you to a weekly chart. Okay, you can see that this level of resistance, support, 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 broken with a candle close below. Okay, that's why I'm a bit more bearish now because the candle closed below the level. So if you look at the weekly chart, you notice there's a series of lower highs, lower highs, lower highs, and right now it has making a candle close below the low. Okay, so obviously the key level I'm looking out for was the key level which was broken out, which is the 1180 level. Okay, so we'll see whether the bears will come in again to push it down, but definitely weekly is on downtrend, monthly is on downtrend, daily is on downtrend. A lot of time frames are in a downtrend. All right, so the key level of resistance you look out for is around the 1180 level to see whether the bears will take it down further. Okay, let's see daily 4 hours, all downtrend. Now, the 4 hours shows a bit sign of consolidation, but a consolidation will not change my bias. It's simply on the downtrend, and gold is very bearish at the moment. All right, for those of you who think that or are shorter term traders or would like to take it from a lower level of time frame, then the short term resistance is around here, around the 117. Let's see. Okay, I'll say 1173 level, around here. Okay, if not, look at 1180. 1180 is a very key level of resistance to look up for. Okay, but notice the short term resistance at 1173. When you tested, it came down, couldn't break a new low. Tested, came down again, couldn't break new low, and right now it seems like it wants to go up again. Alright, so this is where some clients might ask, hey Nabil, is it possible to just take short-term trades? Maybe I short at around the short-term resistance and take profit at the previous low? Yeah, absolutely. Absolutely. You can take such trades. It depends on what kind of trader you are. Alright, for me, I do like to feed on scalps. Feed on all this, I call it little pieces of meat. Alright, I prefer to take a bigger move. So that's why I'm a intraday to swing trader. But if you're a shorter term trader, you like to take this intraday short term scalps, possible. Okay, it depends on what kind of trader you are. Okay, so that's gold for you. Overall bearish. Look out for the 1180 resistance level because that's a very key level that's broken out from the monthly chart. Okay, NG, I have a question. NG has a question. There are many charts to analyze. Besides setting entry alert, does IG offer any program to trigger entry to make our life easier? When you say trigger entry, I mean you're aware of working orders. You can use like working orders. Okay, what I do is this. Whenever I think that a key level, or let's say if I want to trade off a certain level, I will set a price alarm. So let's say if I think that 1173, this is just purely for example, don't take my word for it, but let's say for example, I say that 1180 is a key level to look out for, I will set a price alarm slightly below, maybe 1178. All right, that's linked to my handphone. And then from there, once I receive the SMS, I'll go back to the charts and try to look for a lower time frame to see whether there's any reaction that is coinciding my bias and coinciding with the levels I'm looking at. Okay, that's what I do. Of course, if you think that you're confident enough that a certain level will be respected, you can always do a working order. So you can do a limit sell or stop sell or whatever. All right. But do you use working orders, Angie? Because working orders is something that can make your life easier because you can specify the stop loss and take profit without even looking at it. All right. So working orders might be something you might want to look at on the IG platform as well for you to place your orders so that you don't have to look at it. Yep. Okay. Any other questions so far before I wrap out this round of webinar? Any other questions? Capital Corp. Okay. Okay, so Angie, just to elaborate a bit on your question, yeah, there are different types of working orders, the limit and stop orders. Okay, just remember, limit means that you want to get it at a better price. So if you think that gold is dropping and you want to sell it at 1180, that would be a limit sell because you think that you're selling at a higher price, which is a better price. If you think gold is an uptrend and you want to buy it at 1160, that would be a limit buy. Okay, you use stop buys and stop sells mostly for breakouts. Okay. All right, Capital Corp. Let me see. Okay, let's go to the weekly chart for Capital Corp. I'm not a big fan of Singapore stocks this year. I think it only started moving recently. Nice. Okay, Capital Corp has a very nice level here, which was broken last week. Okay, let me just draw some lines. Hold on. Okay, $10, whole number, broken down. Which week was that? I think it was in October, right? Middle October, pull back and broke it down again. Weekly, definitely on a downtrend at the moment. Let me see whether it's testing any levels of support, yeah. Yep, this level might be a short-term support. Not say short-term, might be a support that might be affected. Simply because if you see I draw a line across, see the previous resistance here? A bit of resistance here, and this level might be tested again. Okay, so weekly chart is definitely bearish. Now daily chart is bearish as well. Okay, a bit more consolidating though. Okay, what I want to look out for, because it's so bearish, right? Look out for this level here, around the $99.70, because this previous resistance. Okay, if the 9.70, ideally you want it to come back to test the key level of $10, you know, because that's a key level, but it has broken down so low, it's quite high to look out for. So look at the previous resistance along the 9.70 and see what happens there. Let me see what level is this. Yeah, around the 9.7, the 9.700 to 9.730 level. Okay, because you notice that this was a key level because when it broke out, it pulled back nicely to that level again before coming down again. So Capital Corp bearish at the moment based on the charts. Look out for a resistance level around 970 to 973. Of course, if it breaks the previous low, then you're looking for other levels of support to target. But right now, it seems to be consolidating on daily chart. Look out for a 970 level to see whether the bears are coming again. Okay. What is the next support for Keppel? The next support for Keppel is, let's see. Let me just draw a line here. It's quite far away. I'll see somewhere here. 88. There's not much strong support all the way to around the $8.90 to $9, honestly. Okay, this level is quite nice. Resistance, resistance, support, support. So anywhere between $8.90 to $9 is quite level. But we're still about 48 cents from there. That's why I say it's better if it makes a healthy pullback before dropping further, because it's a strong downtrend now. But there's also a possibility that it might break and just continue downwards to 90 cents. I don't trade Keppel much. If you trade Keppel not a lot, you should roughly know the behavior of the instrument better. But basically, it'd be better if you make a pullback into some form of resistance before dropping further, because overall is still in downtrend. Alright, what happens is that some instruments like I mentioned, like Nikkei or the yen, sometimes the pullback is not significant, it just drops further. But the next level of significant support, I would say, is around the $8.90 to $9. Okay, all right. If not, thank you for coming. I think I exceeded my time. I spoke for like 1.5 hours, too much. I hope that I'm able to help you in terms of how to analyze the market from a bias. Again, if you like price action, attend the live webinars is the best way to learn. All right, if you attend just seminars talking about strategy, talking about past movement, anybody can do it. But the live market is where we analyze, we plan trades together. I mean, the only thing based on my license, I can't give you buy and sell calls, but I hope that I'm able to give you enough insights to do your own trade planning. Again, trade planning is very important. Make sure you know what you're doing. Don't just jump into a trade. And yeah, come back every week and ask me any questions. Now, next week I won't be in the office. I'll be in the UK office, in IG UK's office. So there'll be no webinar next week. We will start. I think Ryan is away as well, so we will continue on the 18th only. Okay, so just take note of that. A bit of admin to sort out. So anything, again, drop me an email. And thank you so much for coming. Have a good trading week. A lot of volatility coming, so just be a bit careful. Okay, thank you so much. Have a good day.